OSK Holdings' first quarter 2026 results. We're going to cut right through the noise of those dense corporate filings today and get straight to the core business narrative you actually need to know.
Let's dive right in with what is absolutely the most striking number of the quarter. We're looking at a massive 26% surge in property pre-tax profits. And you know what makes this so incredible? It happened with essentially zero top-line revenue growth in that specific segment. This huge expansion in profit margins is really the central theme we're unpacking today.
Section 1. What happened this quarter? Let's look at the baseline.
Okay, so group-wide, OSK delivered a very solid top-level performance. Revenue climbed 9% year-over-year to 434.7 million ringgit. And that healthy top-line growth actually pulled the overall profit before tax up by an even more impressive 13%, hitting 158.3 million ringgit. So right off the bat, we're seeing the business as a whole expanding profitably.
Section 2. Why it happened. The property margin boom.
Now check out the contrast here, because this is where things get really interesting. The property segment's revenue remained incredibly flat. We're talking right around 180 million ringgit. But against that totally flat revenue, pre-tax profits surged to 39.2 million ringgit. They're literally making significantly more money off the exact same amount of sales. It's a textbook example of margin expansion.
So how exactly did they pull this off? Well, it really comes down to project life cycles. They're basically harvesting what they planted a while ago. Older township projects in areas like Sungai Petani and Seremban, along with a few high-rise developments, are hitting their most profitable advanced construction milestones. Strong progress billings basically mean cash is flowing efficiently without them needing a sudden spike in brand new sales.
Section 3. Segment-by-segment breakdown. Let's see how the rest of the business is doing.
First up, financial services. This has been a highly reliable growth engine for them, delivering an 11% revenue jump and a 16% profit rise. This is being fueled by a total loan portfolio that's grown to a hefty 2.6 billion ringgit. Plus, they've just commenced operations and dispersed their first financing in a brand new market, Singapore. That's a huge move.
Moving on, the industry segment presents a really fascinating mixed bag this quarter. They saw a great 25% revenue bump driven by strong cable sales, but the bottom line was squeezed sharply down to just 2.5 million ringgit. Why? Well, growing pains, mostly. They had to absorb losses from Johor Bahru factory upgrades, product testing certifications, and those rising raw material costs on their fixed-price contracts.
And finally, hospitality. Higher occupancy pushed their revenue up by 10%, which is great, but they still posted a 2.4 million ringgit pre-tax loss. Now, this looks to be a temporary hit from major renovations and maintenance. And hey, as anyone who has ever done renovations knows, those upfront costs always sting a little before they actually pay off.
Section 4. The bull and bear cases. Let's look at both sides of the coin.
For the bulls out there, the case rests on incredible visibility. OSK highlights a formidable 1.4 billion ringgit in effective unbilled property sales. That is locked-in future revenue, guys. Add that to a capital financing book that just keeps growing across 3 different countries, and things look bright. On the flip side, the bear case cautions against immediate margin pressures outside of property. Specifically, they're worried about those rising raw material costs in the industry segment we just mentioned. Plus, management's own warning about geopolitical uncertainties, like the Middle East crisis, which could negatively impact logistics and broader construction costs down the line.
Section 5. What investors should watch next quarter.
Here's what's on the radar. Looking at the pipeline, here is exactly what you need to monitor. In the near term, keep an eye on the market reception for new mid-year launches like Phase 3 Aura and OSK Eureka. But the massive catalyst? That lies in Q4 2026. We're looking at the targeted handover of the BLVD Phase 2 project over in Melbourne, which already boasts a super strong 79% take-up rate. Profits from this overseas joint venture are recognized upon completion, making that fourth quarter an absolutely crucial one to watch. So, we'll leave you with this final thought to chew on. As OSK continues to execute its strategy, will these expanding property margins and that massive 1.4 billion ringgit in unbilled sales be enough to completely outweigh those macroeconomic headwinds on the horizon? It's shaping up to be a fascinating setup for the rest of the year. Thanks for joining us for this explainer, and definitely keep your eyes on those margins.